Cool.
That's all right.
I'll kick you off. G'day, guys. Thanks for your time today. My name's Stu Rasmussen. I'm the founder or co-founder of a company called Syncly. We're a pretty techie company, so we help organisations such as law firms and accounting firms and so on synchronise data between multiple technology platforms. So we're a data synchronisation solution.
Great.
Shavin, you want to go next?
Yeah, sure thing. So my name's Shavin. I'm the founder of a company called Build My Will. Basically what we do is make it free and really easy for people to make a simple will online and then encourage them to leave gifts to charity if that's something they choose. So we're primarily working with charities to help them sort of send that resource to their donors, encourage them to make a will and potentially leave a gift. So that's us.
Great. Joe in digital.
Yes. Hi, guys. My name's Joanna. I'm the Chief Operating Officer here at InDigital. InDigital, we are an Indigenous edutech company, and we teach kids digital skills through a cultural lens. So we've got our InDigital Schools program, and we've also just recently launched our InDigital Storytelling program, which is a similar workflow to the InDigital Schools program, but we're working with corporate organisations to run that program as well. So, yes, us in a nutshell.
Great.
Right.
And then there's two more companies that are missing, but Sarah's kind of hit the record button for them. BNext Smart Contracts backed onto the blockchain based out of Melbourne. And then there's Avoca, which is a document automation engine, and they're based out of the UK.
Okay.
Stephen, is everyone joining the call today a relatively new addition to the LawTech Hub? Is that correct?
Everyone except for BNext is new. So,
right.
Yeah. Alex, I will turn it over to you guys.
Okay, great. All right, thanks, Stephen and Sarah. Hi, everyone. My name's Alex. So I'm one of the mentors here at our LawTech Hub, and basically anything accounting and tax related, you can come and speak to me about. Happy to have a chat. So just a brief background about myself. I work at a company called William Buck, which is a kind of a full service accounting firm. And then within William Buck, I pretty much just work exclusively with tech companies from startup through to exit. And the reason I work just with tech companies is you could probably appreciate the tax laws were written about 100 years ago, well before the development of modern software. And these types of businesses touch on quite a lot of complex issues in a really short period of time. And there's just a lot of things that the typical accountant it's almost a different language, isn't it? Kind of your typical accountant wouldn't understand. So we do a lot within the startup community as well, such as this, like mentoring at accelerators. And we also sponsor the Spark Festival, which is Australia's largest festival for startups. So today I just wanted to spend about maybe 10 minutes and just running through kind of the typical services you may need from an accounting firm on your journey from startup through to exit. There's probably things that you know about already that you may need some advice on, but then there's also you don't know what you don't know. So we're just going to list through some of those different services, and then maybe in a few weeks' time or whatever the case may be, I'm happy to kind of give an overview on some of the tips and the traps and other things that we see that are relevant for founders. But at the moment, it's just a very high level. So I'm just going to share my screen. Okay, great. And can you guys see that? Yep. Okay, great. All right. So let's get into it. So the things I've got here listed on this page is almost in chronological order. It's kind of the accounting and tax things you'll need from the start of your startup journey all the way through to an exit. So we're just going to go through some of these and hopefully give you a bit of a better background in terms of what you may need. First one is the R&D tax incentive. I've put it at the beginning because a lot of tech companies tend to rely on this. We all know that banks are not going to lend you money, so you need to get your funding from elsewhere, and the R&D is Australia's largest federal government grant. Okay, what you'll need with the R&D tax incentive is the word side of things, the application, and then the numbers, which is the calculation. That goes in your company tax return. And the way we approach the R&D is we work with the founders throughout the income year. It's not something you should just look at the end of 30 June, but you should just try to have it in place and integrate it with your existing internal records. So then that way you can show that you're looking after you can show to the ATO that you're looking after your R&D claim throughout the year, because they expect to see evidence that's contemporaneous, basically in existence of the time the activities are conducted. Okay. After that, you've got your tax compliance. So this is the boring stuff, as I like to say. You'll need to get a company tax return lodged, financial statements prepared. We will do this in conjunction with the R&D claim as well, because people at the end of the day, they tend to forget that the R&D tax incentive, it is a tax incentive. So it should be managed together with whoever's preparing your tax return. There's the ongoing BASs, and there's probably some annual reporting as well. At the moment, I don't know if this may be relevant to some of your businesses for the 30 June year that's just passed, but right now and over the next few weeks, there's some reporting obligations like payroll, employee share schemes, ESIC, early stage innovation company, and the taxable payments annual reporting. A lot of those are going to be relevant. And if you think this is something that you may need to do, by all means, feel free to reach out afterwards. Once you've probably got a bit of a core team around you, a core senior teammate, you may want to implement an ESOP. And the way you go about doing this, I get asked the question all the time, is this something that we as founders can do ourselves, or is it something that we need to pay the money for? I'm very open and honest with a lot of these founders. I'll tell them what things they can probably skimp on. ESOPs is definitely not one of them. It's one where it's going to impact your employees. It can impact the company as well. So if you have to pick and choose what you're going to be spending your money on, this is one that I would definitely recommend you actually pay the lawyers and the tax advisors to do properly for you. So we work with the company board and the lawyers to get an ESOP set up. The company board says basically the commercial parameters. It's like, hey, we want to have these employees in the ESOP. These are the vesting conditions we want to give them. And then the lawyers prepare the documents, and then we would just provide guidance in terms of how we can, how the ESOP can be structured in the most tax effective manner. Speaking of which, the most tax effective ESOP is probably your startup concessions one. It's the most favorable to employees because it means they don't have to pay any tax whatsoever until they actually sell their options or shares. So if you can qualify for that one, that's probably the way to go. Okay, I've mentioned a few other things. You'll need an option exercise price calculated. That's something that that we will do, especially if it's part of the startup concessions. And there's annual reports that need to be lodged with the ATO each year as well. Further down the track, you're probably looking to raise capital, so outside of government grant funding, but probably from investors. Raising capital, okay, this is one of those things where I mentioned what can you do yourself, what can you pay money for? I've basically mentioned on this slide everything that like an accountant can help with. We can do all of it for you, or we can do some of it or none of it. So it's one of those ones. So the benefits you'll have in getting an accountant and a corporate advisor in particular to help you with raising capital, just putting your docs together, your pitch deck, your information memorandum and term sheet. They can assist with all the complex financial modeling and your valuation as well. Assess whether your company is ESIC eligible, so ESIC early stage innovation company. I'm not sure if you guys have heard of that, but if your company is an ESIC, it just gives your investors a tax benefit. It gives them 20% back off their tax bill for every dollar they invest in you. So if they put in $1 million into your business to buy shares, they get $200,000 back. And also they get no tax to pay if they sell the shares within 10 years. So it's a very generous provision, and it is something that we can help you assess whether the company is eligible for it or not. The benefits of bringing in an accountant or a corporate advisor, just the network of contacts, introduce you to potential investors, manage the due diligence process. So a lot of times, especially when you're doing, in particular, your Series A raise, the investors will get all their lawyers and accountants and ask you a bunch of questions, and they want to assess the risk and see what documents you've got. That can drag on if it's not done efficiently. So that's something we can manage with. And then also your share subscription agreement and your shareholders agreement. And like I said, I've got clients that they get us to do all of this. I've got clients that they do all of it themselves. And then I've got clients that are somewhere in the middle where maybe they just want help with one or two of these items. As your business grows even further after a capital raise, that's typically where we see the team may be requiring assistance with their accounting solution. So at the start, you could be doing the zero yourself. Maybe you've got a bookkeeper that's doing the accounting for you. As the team grows, it's one of those decisions where, do you want to bring in an internal finance team like a CFO, a financial controller, an accounts person, or is it something you want to outsource? And at that stage where the company in particular has done a Series A raise, that's where we see they need some guidance with this, and we can assist with any of it or the entire outsourced accounting solution. From the grunt work, I suppose, the data entry, all the way to the virtual CFO role and the board reporting as well. Next up is scale up and expansion. So what happens when the business is really taking off? That's where we see decisions being made around structuring of the company, maybe introducing an IP company and a trading company just for asset protection. Things like tax consolidation and GST grouping, those are very common where you've got multiple entities in your group. And then if you're looking to go overseas, there's a flip up process as well. So, for example, if you want to go to the US, because we all know the US is the center of the universe and investors will only want to put money in US companies. If you need a US company set up, that's a flip up, and that's something that we can manage. And also give you access to things like the Export Market Development Grant as well, which is government funding specifically for businesses looking to go offshore. And then the final path on your journey, the final stop is if you're looking to do an IPO or exit. If you're looking to do an IPO, you're required to have audited financials for at least 2 or 3 years. So that's where we can pull in the audit team to do that. And the corporate advisory team as well, they can do the guidance on the listing process. There's a few specific documents required for the ASX, like the investigating accountants report for a prospectus. Can also make introductions to brokers, and then it'll also manage the most tax effective exit for you as well. So there's a right way to exit and there's a wrong way. Okay, so I've just got my email there. You may have this already anyway, but that's, I suppose, in a nutshell, the kind of services you may require from an accountant on your startup journey.
Great. Any questions for Alex?
That was awesome, Alex, and Stu here from Syncly. I'll turn my camera on again. You bang on point in regards to, it is a bit of a different language, and you certainly hurdle through a number of these challenges quite rapidly in the tech space. Specifically, foundation to cap raise to exit happens in a much more condensed time frame than it might have traditionally. So you bang on. From our side of things, I guess it's interesting around how you balance the point of engagement with somebody for these types of services and how you're typically commercially arranging those relationships with startups, right? So can you give me an idea around typically how, not numbers per se, but just sort of how you go about sort of charging for these things? Is it on a case-by-case basis or a request basis, a time basis, a fixed fee basis, or a value basis? give me an idea.
Yeah, sure,
Yeah.
sure. So, with members that are part of the cohort, the LawTech Hub, because I'm a mentor, I'm always here and happy to have a chat. So, if you just wanted to speak for half an hour, I'm more than happy to do that and point you in the right direction and give you some tips.
Yeah.
If you did want to actually engage, the typical services no one likes surprises when it comes to fees, so we would always give an upfront fee quote for, say, the tax return and the R&D. And that would be a fixed fee. With the R&D in particular, we do a success fee, and we just have a kind of a minimum fee included as well, just to recoup our time costs. You can always go for somewhere that's cheaper. That's just the way it is. But we just have that minimum fee in there for R&D because there's always the quality of work that needs to be done. Like we've never had an R&D claim knocked back, so that's something that we just want to make sure, and that obviously takes time. But it's usually a fixed fee up front where we can provide it. If it's something that's a bit more bespoke and kind of how long is a piece of string, and we don't know until we actually dig into the detail, it would just be usually an estimate up front as well.
Yeah, and that's no surprises there. So your recommendation in regards to the way to engage or start to build a relationship with someone like William Buck, how would you typically sort of advise a company, pre-cap raise, all that sort of stuff, obviously figuring out a bunch of these systems and getting their head around all the opportunities out there from a R&D and so on and so forth. How would you typically advise starting a relationship with William Buck and then obviously growing with them over time?
Yeah, so the way I'd start the relationship is just to have that initial chat, whether it be for half an hour or an hour, and just find out what do you want to do yourself or what do you need other people to do, and then from there we can say, hey, you're probably fine from things like your ongoing accounting. You probably don't need us at this stage, and alternatively, it could be a situation where I would say maybe an ESOP in particular, hey guys, you probably should get this done. And then with the R&D, also it depends on the costs as well. So if you've got R&D spend of 20K, I'm not going to get involved for that because that doesn't make sense for me to take about 30 or 40% of your refund. So that's one where I could say you're probably on the low risk side of things and you should do it yourself. It's more just finding out where the company's at, what kind of expenditure we've got, how many employees and the like, and sort of take it from there. And keep in mind, you can always just tack on things as well.
Yeah. Perfect. Thanks, mate.
Good. Any other questions? So one of the things I'll make sure everyone knows is Alex is offering kind of office hours once a month and that initial free consultation. Feel free to reach out to Alex. He's a lovely guy. So make sure you take advantage of him.
Great. Thanks, Stephen. Nice meeting you, everyone. I'm going to hop off now. I've got to do daycare pickup, so we'll be in touch soon.
Good on you, mate. Appreciate
Sounds good, Alex. Thank you. We'll be in touch.
Thanks, Alex.
Thank you.
All right, next over to you, Sam, Luke, and Roxy.
No problem. I think Rox is going to drop off the call because her internet is being extremely problematic. But I will, I will take over from here. If I can figure out how to share content. There you go. Okay. Can you see that?
Yep, you're on screen. Oh, not anymore. Oh, there it goes.
Okay. Now, so this is in presentation mode?
Yep.
Great. Okay. All right. Well, look, this is actually quite a formal presentation, and I won't spend too long on each of these slides. So effectively, Marsh, for those who don't know who we are, we call ourselves the world's leading insurance broker and risk advisor. That's based on both size, scale, and ability. So we have 34,000 plus colleagues around the world, 35 industry specializations, and 500 plus offices. This is just a very brief, a very high level overview of the different territories that we're operating in. Within the broader business practice, we do have a specialist cyber and technology practice. 200 dedicated cyber professionals around the world. Members of our team have legal backgrounds. We have a cybersecurity consulting backgrounds. Former Army intelligence officers are involved as well. We have whole dedicated teams of cybersecurity technical experts and experts in risk quantification, as well as the insurance practice, which is our primary focus. We serve more than 6,000 cyber and technology industry clients of all sizes, and we have a number of specific awards to our name in the space. We also have key partnerships with a number of different providers: Science, FireEye, Microsoft, SSIC, Cylance, Coalfire, etc. They're all listed here, and I'll provide this slide deck at the end of the session. I think it's important to work through why we view the tech industry as a specialist space and why we think it's necessary to apply a specialist approach when dealing with technology industry clients. So there's a few key risk features that apply to technology clients. So generally, technology clients are responsible for the collection and use of large amounts of customer data. That provides exposure to privacy regulators and potentially liability issues as well. Sorry for the formatting here. The customer base is often highly reliant on continued provision of services. So there can be quite substantial outcomes in the event of an outage, especially with the present circumstance with people working from home and the ongoing focus on the ongoing focus on working from home arrangements and the need for technology solutions to facilitate that. Tech industry clients in particular have a central role in the supply chain. That also makes them a prominent target for cyber attacks. So recently this year, we've seen a number of really quite substantial attacks on technology service providers around the world. Some big names in this space have been SolarWinds, Accellion, Microsoft Exchange, Pulse Connect VPN. For the legal industry specifically, Law and Order was one quite substantial name that suffered a breach in November of 2020. That was a ransomware attack that had a number of flow-on consequences for themselves and for their client base as well. Tech companies are often subject to quite onerous contractual liabilities resulting in from failures in ongoing service delivery. And they're often more focused on growth and product development than risk management as well. Generally, in our experience, technology service providers often receive very little specialist advice around PI and cyber. And in recent surveys, they've viewed this particular risk as being of a key concern. What we also find is that in a lot of cases, they don't purchase cyber insurance. So bearing all that in mind, I just wanted to provide a quick overview of some of the key insurances which we recommend that you consider if you're not already contractually required to take these insurances out, and you may find further down the track that there is a contractual requirement for you to take out some of these insurances. So the first of these is what we call a technology E&O or IT liability insurance policy. This is a specialist form of insurance that's been developed for technology service providers to address a key issue from an insurance perspective, at least, which is software development and associated advice a product or a service? Because of the way that the insurance industry deals with this particular question, depending on how it's viewed, using traditional forms of professional indemnity and general liability insurance can create issues for those traditional coverages due to different exclusions which apply to those policies. So the insurance industry has responded to those issues by developing a single product which includes coverage for both professional indemnity and general liability in a single policy form. So professional indemnity, just to give a quick overview here, that covers claims for negligence or breach of duty arising from acts, errors, or omissions in the performance of your professional services. And then general liability covers you for claims involving bodily injury, property damage, in some circumstances, mental anguish resulting from your products, services, and operations. The broadest of these policies also cover contractual liabilities over and above those that would normally apply in absence of the contract as well. Another key insurance that you might look to consider is cyber insurance. Cyber insurance is designed to provide modular cover for multiple potential losses resulting from a cyber attack, outage of systems, and the loss or interference of data. It's effectively very broad form coverage for liabilities that can result from an interference with your systems or an interference with your data, with a specific focus on PII, personally identifiable information, and confidential corporate information that you might be holding on to. This gives a very high-level overview of the different coverage that you can purchase within a cyber insurance policy. Probably the most important one would be this event management and breach response, especially for a smaller organization. A cyber insurance policy gives you the ability to access a pre-agreed panel of service providers who can assist in mitigating the incidents, mitigating any cyber incident, and getting you back up online, providing legal advice around what you need to do from a next step, and providing a number of additional services, including IT forensics, public relations expenses, that you may not necessarily have relationships with specialist providers on your own to deal with that particular incident. Other covered costs include business and network interruption, cyber extortion and ransomware, data restoration costs, and then also a number of third-party expenses, privacy liability, network security liability, and privacy regulatory defense costs, which effectively covers you for fines and penalties delivered by regulators, especially if you're operating in international territories, GDPR in Europe, and especially in the United States. There are a number of specific regulatory requirements that you might need to meet around dealing with a data breach, and the cyber insurance policy is designed to assist you in dealing with a number of those circumstances. I'm conscious of time, so I won't spend too long speaking further on this. Some other key insurance considerations that you might like to look at include directors and officers insurance. So that's a policy that covers your personal liabilities and the personal liabilities of your executive team for management decisions and decisions made in, for example, in fundraising. Property insurance obviously does what it says on the tin. It covers any particular property that you might be responsible for. Key person insurance provides you with an insurance policy in the event that there's a key individual within your organization who suffers an accident, for instance, and provides some recourse to the insurance policy in that circumstance. Workers' compensation is something which every business needs to deal with, and we do have a specialist team who can assist with that particular concern as well. And then statutory liability covers you for to the degree that you are subject to statutory fines and penalties, particularly in result of breach of workers' compensation legislation. A couple of concerns to work through around the use of cyber and E&O insurance for the tech industry. So again, this goes back to why we view this as a specialist product and why we think it needs specialist advice. There are a few different concerns that can occur if this is placed incorrectly, effectively. So potential for a cyber incident to trigger parts of both policies. So there's a circumstance where you can have a ransomware attack that ultimately results in a service interruption to your customers, and that then results in a professional indemnity claim. Crossover in coverage. Some of the key components of cyber insurance will also trigger various parts of a professional indemnity policy. Privacy liability, network security liability, and in some circumstances, incident response expenses. This all creates issues, including other insurance clauses within both policies, which are competing, arguments between insurers if the two policies are placed with different insurance companies, the need to pay two policy deductibles over the same incident. Ultimately, it can result in a non-optimal premium spend and potential gaps in coverage due to unaligned policy exclusions. So a couple of different solutions that we recommend here. The placement of combined coverage. So it is possible now to place a combined cyber and technology errors and emissions policy. This has been common in London for several years. It's more common from Australian insurers over the last probably 2 years. Basically, all of the coverage which I've mentioned previously is placed with a single insurer, subject to a single policy deductible. What that ultimately means is that your premium can go to a larger overall limit rather than the need to buy two separate policies. Alternatively, and some of you may be in this situation, you may not be, but if you already purchase an information technology liability product or a professional indemnity product, but you don't buy a cyber insurance policy and you would like to, you can look to arrange an excess difference in conditions or cyber wrap coverage. So that what this basically does is it places the cyber alongside the information technology liability policy. The policy language specifies that any loss which is covered under both policies is covered under the IT liability first. Where there is any gap in coverage that's covered within a cyber policy, the cyber policy fills that gap, and to the degree that the professional indemnity policy is exhausted by the claim, but is also covered by the cyber policy sits in excess. So it gives you a higher limit effectively. Basically, what that allows the two policies to do is to dovetail to provide you with seamless coverage in the event of an incident, which is covered within both policy forms. That pretty much wraps up everything that I was going to say around, I guess, the technical components of this. But what I'd like to do just before I hand over to questions, bearing in mind the time as well, is just to provide a very quick case study of how this can work in practice. This case study is based around, this has been provided to us by one of our key insurance partners. This is a real life claim that they dealt with. It involves a software developer who delivering a SaaS model to clients across the medical industry. In this circumstance, they suffered a malware attack. Basically, that allowed unauthorized access to their database infrastructure by a malicious third party. That database held sensitive client information across a number of different jurisdictions, including Australia, Singapore, the UK, and the US. The hacker attempted to extort the insured in this circumstance, threatening to release that data. Ultimately, the insured rejected that extortion demand and sought to rely on their insurance policy. So, a circumstance of the loss, basically, the forensic investigation determined that the data was accessed and personally identifiable information was extracted. That information was also published on the internet. Several of their clients cancelled licenses to the software. As a result, some of them also notified their own cyber insurers. And ultimately, what that resulted in was a number of lawsuits brought by their client base seeking claims for damages due to breach of contract, loss of revenue, and additional costs of working because of their own business interruption. Forensic investigation costs, regulatory reporting costs, a number of associated issues as well. There was a regulatory investigation involved, and several patients also sought damages for breach of privacy. This, I should bear in mind, this occurred in an international territory. From an insurance perspective, how the policy responded. The cyber insurance component of the coverage that they purchased covered them for their incident response expenses. So that included their IT forensics, public relations, extortion consultancy, and for legal and privacy advice. The policy also covered them for data and system restoration costs. So the cost to recover the affected database and applications that resulted from the incident. The technology errors and omissions policy provided them with coverage for defence expenses to deal with the lawsuits brought against them, liability for costs of refunds to clients, costs in mitigation, so amounts that were invoiced but weren't collected by the client in order to mitigate potential losses, and then liability to clients for business interruption, forensic investigation, regulatory investigation, and fines. Liability for failure to perform services according to the SaaS agreement, and liability arising out of the failure to properly manage and store personal and confidential corporate information. And that included liability to patients. So that just, all that's really designed to do is give you an overview of how these particular policies work together to cover off a number of the different potential, a number of the different potential losses that can result from one of these incidents. That's pretty much everything that I specifically had to speak about with regards to the specialist role that we fill around cyber and E&O insurance in particular. We do have a number of other specialist teams who can assist in some of the, I guess, the more mundane components around property in particular. That's a key concern for a lot of smaller organisations. General business pack insurance, management liability as well. My colleague Luke Costello is on the call, and he and I are both willing to assist with the management liability component if that is of concern for you. One thing which I did want to flag as well is that we do have a specialist private equity and mergers and acquisitions team, and we have the ability to assist with we have the ability to assist also with prospectus liability. So yeah, tying back to the previous session, to the degree that you are looking to conduct an IPO in future, we offer a number of services in that space to give you advice around due diligence and around some of the insurance requirements and concerns that might crop up in that circumstance where, yeah, in the event that you're dealing with an IPO in future. So that's pretty much all that I have to speak about here. My contact details are here as well, but happy to answer any specific questions that you might have.
Questions for the group?
Just stop sharing now.
Again, another great presentation. Thanks, guys.
So it's a lot to download there. I'm just
it's good.
20 minutes for these things, and it's just like, here's everything I can throw at you. So
yeah, no, it's good though, because it was, I mean, for us, it's bang on point with our SaaS agreement and you know, a lot of the liabilities that unfortunately we have to be covered for, and it's becoming more and more complex from that perspective. Your advice on, you know, it's very easy to try and just go out and very quickly find an insurance cover which marries up to your, you know, overall liability, as opposed to, you know, on your SaaS agreement, right? We're liable for this because it says it in our SaaS agreement. Let's find something that just plugs that gap, sort of thing. Yeah, talk to me through that process. And
sure. Look, I mean, this is the thing with these presentations. I can talk to you until the cows come home around all the different insurance coverages you might like to purchase.
Yeah.
But ultimately, there's a question of what you are going to purchase from a cost perspective. You're at a relatively early stage in the development of your organization. You don't want to spend an extraordinary amount on insurance if you can avoid it. So most organizations in your position will tend to purchase these coverages to the degree that they are required under contract more than anything else. There's nothing wrong with that. But I think it's important from our perspective, at least, that I think one thing which is often left off is the cyber insurance component of this. And we have had a number of circumstances where technology firms may not necessarily purchase cyber insurance specifically, or they may not take out the cyber insurance components of the information technology liability products, which they can do. And following a breach, there are some circumstances where they would have benefited from especially having access to the incident response services within the cyber insurance policy. So, for a relatively small organization, taking out a cyber insurance policy makes a lot of sense to give you access to those service providers, especially if you're looking to scale as well. Where the cyber insurance market is right now, it's actually, for larger organizations, it's becoming increasingly challenging to get this insurance coverage. So if you look to purchase it at a relatively early stage, build the relationship with the insurance market, those insurers know who you are going forward, and you can in some circumstances mitigate the circumstance that some of our clients find themselves in, where they look to purchase cyber further down the track and they find it quite difficult to do that.
Yeah,
so
that makes sense. I mean, so talking to another colleague of mine who's sort of 3 or 4 years into their journey of their startup, and the 3 that he listed out to me were commercial general liability, professional liability, and workers' compensation, because they've got employees. He didn't mention cybersecurity either. So yeah, that's an interesting point. On the one of the other looming requirements of all tech startups is around certifications, around ISO certifications, or all those sorts of regulatory frameworks. You guys sort of understand that framework as well, and you're able to sort of say, this is how these two relationships work, and so on. Yeah. All right.
Yeah. So what we're increasingly finding, especially when it comes to cyber insurance, is that unless you can evidence a compliance with some of those, there's no specific framework that you need to comply with necessarily, but unless you can evidence some compliance with 1 or 2 of those frameworks, a lot of insurers actually won't insure you. We've got I mentioned earlier in the presentation around the consulting arm that we operate in. We do, in Australia, we have a specialist cybersecurity consulting consulting team, which is led by a gentleman called Faisal Janif, who he's previously been a CISO himself, has very good relationships with the ACSC. So if that is of concern, the need to look to implement specific forms of framework, whether it's the NIST framework or ISO 27001 or some of the other cybersecurity frameworks, we can offer assistance in that circumstance if that's necessary.
That's good to know. Thank you.
Yeah, that was super helpful, Sam. I'm going to have to jump off because I've got to run to another meeting. But I definitely want to get in touch with you just in terms of talking to you about our products. You basically answered my question on the slide where you talked about like the option 1 and then the option 2 wrap around, because I guess I was thinking we have a lot of these insurance policies in place. I'm certainly we haven't insured ourselves through a cyber insurance company, and I'd love to be able to engage your expertise. My main question, I guess, is around like some of these we've got in place, some of them we need to get in place, and I guess I'm just wondering how, like, is this something we'd work with you guys over the next 12 months to renew and get us up to speed with? Because I guess I'm thinking we've got a whole bunch of policies in place, but I'm going, I hope they're actually going to cover us for what we need.
Yeah, sure. Do you know what your renewal date is? You don't need to answer that question right now, but if you do know that, that's the starting point.
Yes, I do. Yes.
If knowing what policies you've got, are they all with a single broker is probably the second question. What the overall renewal date is. From there, if you seek to appoint us as your broker, we can conduct a review of the policies that you currently purchase. Do we think there's anything specific that you need or that needs changing? Once you've appointed us, we then take conduct of your existing insurance program and we renew them on the date that they renew and look to implement any additional insurance as and where required as well. So if you've got a program in place but you want to purchase a cyber insurance product 2 weeks from now, we can help with that as well.
Okay, amazing. And how does it work in terms of fee structures and working with you guys as well? Is there a fee to kind of take you on in that kind of consultative capacity, or?
So it depends on the scope of service that you're looking to engage with us on. Normally for smaller organizations, we tend to operate on a commission structure. So the policies that we place are normally subject to commission. If you're looking to engage with the consulting team, there's a separate fee that applies for that. Or in some circumstances, we can look to negotiate an overall service fee that encompasses everything. It really comes down to exactly what you're looking for from us.
Sure. Okay.
But you do offer that first one-on-one consultation.
Yes, absolutely. Right. We're happy to have a chat and have a look at what you currently purchase and provide some initial guidance on it.
Okay.
But where it comes to actually servicing the program itself, that's where there's a fee involved, one way or the other.
Okay, that makes sense. Thank you so much.
No problem.
You made something really complex very clear.
Well, that's good to know because I never know if I do with these things. So thank you for the feedback.
Yeah, definitely. Thanks everyone. I'm sorry, I'm going to have to jump off, but it's really nice. I'll see you all again, no doubt, very soon.
Thanks very much.
Sounds good.
Thanks, Joanna.
Bye.
Any other questions for the Marsh team?
Your general advice, Sam, in terms of trying to get all these under the same broker is probably sort of, clear anyway, in some sense.
Yeah, it's an interesting thing especially with smaller organizations. Oftentimes, you go out and when you're starting up, you go, what's the base level of insurance that we need? And sometimes you'll go and buy that directly off the internet. Or you may have, one of your team members might have a relationship with somebody who works in a broking firm. So we often find that, there are 2 or 3 different policies that are managed separately from one another.
Yeah.
And having a centralized approach, especially if you're looking to scale, we think is really important because it just means that there's nothing that's missed. If you have a single top-down, it's the same with any service provision really. If you have a single top-down approach, you've got an understanding of what you purchase, is it effective, and are there any gaps that you need to consider?
Yeah, I think that's the thing, right? I mean, you buy insurance in case of the worst case scenario. So you kind of got to think about, in that worst case scenario, is there a downfall to having these other insurance companies sort of playing the blame game? And does that happen often these days? And I'm assuming it does, right?
It can do, yeah. It's cyber in particular is quite complicated. And it's a developing space as well. So you do have to be a bit careful around how some of these exclusions operate.
Yeah.
And having a broker relationship can effectively just mitigate some of that burden around knowing what exclusions you got in place and what you need to be concerned with.
Yep. Makes sense.
Great. Well, guys, thanks for the tips. Sarah's kind of shared the link to get a hold of Marsh, what they offer if you need a reminder. So it's feel free to go there. Sarah, do you want to close it off with what's next in our showcase coming up?
As you would have all heard, we've got our showcase, which is taking place next Tuesday. So just a reminder to please come along for your 5-minute pitch to our panel. It's just an opportunity for you to for people across the firm to meet you and learn more about your services. And we've found that's been really helpful in the past to just raise awareness around our startups. Today's presentation, if you want to revisit any, I will post it up on the website. And as Stephen said, all the contact details are on the website as well. So do reach out, and we hope that you found it really useful.
Thanks, guys. That was awesome.
Thanks, Sam.
Thank you, guys.
Thanks all.
Thanks, everyone.
Bye.
Yeah.
See ya.